By the end of this video, you will learn what is support and resistance, how to spot key turning points, and how to trade support and resistance. Support and resistance are key turning points in the market which are formed by price swinging high and low. Support is also referred to as demand zones. These are areas in the market where forces of buyers meet and traders look for buying opportunities at these price zones. Resistance is also referred to as supply zone. These are areas in the market where forces of sellers meet and traders look for selling opportunities at these price zones. Let's get straight to the point and see how we can identify these key turning zones. When you open the chart, look at where you see price turning around. If you see price turn around a certain level or a certain zone more than 2 times, then that zone is a key turning level. It may be support, it may be resistance. Support is usually below the current market price, while resistance is usually above the current market price. If you look far right to the screen right now, you will see a figure highlighted in red, 1.10863. That is the current market price. It's not always static, it's always moving. Any zone that is below that current market price is labeled as support or demand, and any zone that is above the current market price is labeled as resistance or supply. Here's an example of a resistance zone. You can see on the screen that price rejected a certain level 3 good times. Forces of sellers came in and drive price lower. That means that particular zone or level is a resistance zone, and you can also see that it is above the current market price. I want you to take note of this. Resistance can always turn to support, and support can also turn to resistance. As seen on your screen right now, you can see an instance where a certain zone was acting as a resistance, then price closed above it and it started acting as a support. This happens most of the times in the market. Here are some tips to spotting key turning points. Spot them on the higher time frames. View them as zones, not as price levels. Include as many touches as possible, minimum of 2. If you see more than 2, better. Don't draw too many zones. A lot of new traders get caught up with this. They tend to draw too many zones. When you draw too many zones, you won't know the zones to focus on. The lesser the zones you spot, the better. Trading support and resistance is actually easy. All you need to do is wait for price to tag the key zone you spotted. Watch out for price rejection or impulsive moves from that zone. Place your stop loss away from the zone when you take the trade. Then your take profit should be at the next key zone. So that is it. If you want to learn more about how you can deploy a proven and winning trading strategy, then make sure you enroll for the Masters of Swing Trading. It is a beginner to advanced trading course. In the course, you are going to learn how to analyze and execute trades with precision. You are going to learn advanced techniques to maximize profits even in the most volatile market condition. And if you should enroll in the Masters of Swing Trading today, you will have access to a support group, live monthly sessions, and access to profitable trading tools. The link to enroll is in the description below this video. Click on it now and learn more about the Masters of Swing Trading.